Micron technology is currently trading at $77.61, showing a significant intraday decline of 3.44% as of the market close on Thursday, May 14, 2026. This downward movement followed an intense week of volatility that saw the stock whipsawing between extreme valuations. While the broader semiconductor sector attempted to find a floor, Micron faced selling pressure that pushed it away from its recent record highs. The market sentiment appears to be shifting from pure euphoria toward a more calculated assessment of supply constraints and the actual pace of memory chip integration in data centers. The immediate drop in price today masks a much more interesting development that most people are completely missing. While the headline figures show a red day, the massive institutional buying that stepped in around the $700 level earlier this week suggests that the big players are using these dips to accumulate heavily. It is a classic move where retail investors get shaken out by the volatility, while long-term funds quietly build positions. This creates a fascinating tension because the public narrative suggests the semiconductor peak might be here, yet the order books for high-bandwidth memory are filled through 2026. The expectation among most traders is that Micron will simply follow the general ebb and flow of the Nasdaq, but the reality is that its specific dominance in HBM3E chips is decoupling it from the broader index. If we look at the common ground, most people think that memory is a cyclical commodity business where prices eventually crash. That is the traditional logic. However, the contrarian take here is that we are no longer in a standard cycle. We are in a structural shift where memory is becoming the primary bottleneck for artificial intelligence. You can have the fastest GPU in the world, but if the memory cannot feed it data fast enough, that GPU sits idle. This reality forces us to rethink Micron not as a chip maker, but as a critical infrastructure provider for the digital age. The tension between the old commodity mindset and the new infrastructure reality is exactly where the smart move lies. The recent trading volume on MU has been nothing short of staggering. On Tuesday alone, we saw nearly $100 billion in market value evaporate before a stunning afternoon reversal. That kind of price action tells you that the market is struggling to price this company correctly. Is it a $100 stock or an $800 stock? When you see directors like Stephen Gomo divesting shares while the company simultaneously reports revenue that has tripled year over year, you get a confusing signal. But look at the earnings. The second quarter of 2026 showed sales of $23.86 billion. That is not just a beat, it is a total demolition of expectations. The market expected strong numbers, but they did not expect a 180% surge in stock price within a single year. Institutional activity suggests that the smart money is heavily focused on the scarcity of supply. Samsung is dealing with labor tensions and potential work stoppages, which only strengthens the hand of players like Micron. When supply is tight, pricing power moves to the manufacturer. This is why tools like Schwab Intelligent Portfolios and other automated systems are often seen increasing exposure to these high-momentum tech names during sector rotations. If you are doing your own research or looking for investment help on various investing sites, you will see that the narrative is shifting toward a supply-side squeeze. Let's get real about the business model for a second. Micron is essentially one of the big three memory manufacturers globally, standing alongside Samsung and SK Hynix. They make DRAM and NAND. DRAM is your short-term memory, fast but volatile, while NAND is your long-term storage. For decades, this was a race to the bottom on price. But then came high-bandwidth memory, or HBM. This technology stacks memory dies vertically, allowing for massive data transfer speeds. Micron's latest HBM3E product uses 30% less power than the competition, which is a massive deal for data centers trying to manage heat and electricity costs. They recently sampled a 256GB DDR5 server module that is basically the gold standard for high-performance computing right now. Comment below how many shares of Micron technology you currently hold, or if you are waiting for a deeper dip to $700 before moving in. When you think about individual brokerage accounts and the rise of online investing, a lot of the retail flow has been moving through platforms like Robinhood and SoFi Invest. People are using Robinhood stock trading to play the short-term volatility, while others are using interactive brokers for more complex option strategies to hedge against a potential downturn in the semiconductor space. The SoFi trading platform has seen a surge in active investing as younger traders try to catch the next leg of this chip rally. Whether you use the Fidelity mobile app or prefer the interactive brokers platform, the data points to the same thing. Retail is heavily involved here, which often leads to the kind of evening star candlestick patterns and technical breakdowns we have been seeing lately. The expectation was that the exit from the consumer market, discontinuing the Crucial brand in early 2026, would hurt their brand recognition. But the reality is that the move was a brilliant pivot. By shedding the lower-margin consumer business, they have freed up manufacturing capacity for the high-margin enterprise and AI markets. They just committed $24 billion to expand wafer manufacturing in Singapore. That is a massive bet on the future. They are not building these factories to sell thumb drives. They are building them to power the next generation of AI clusters. The future outlook for Micron is a battle between technical overextension and fundamental strength. On one hand, the stock has run up so fast that a correction feels overdue. On the other, the supply for 2025 and much of 2026 is already sold out under long-term agreements. That provides a level of revenue visibility that this company has never had in its 45-year history. The risks are real, though. If the AI build-out slows down, or if SK Hynix manages to out-innovate them on the next generation of HBM, the pricing power could evaporate. But right now, the gap between what people expect, a cyclical crash, and what is happening, sustained high-margin demand, is widening. For those looking at online investment options, the variety of choices can be overwhelming. Some prefer Fidelity ETFs for broad exposure, while others go for Fidelity mutual funds or direct stock picking via a Fidelity brokerage account. The Fidelity Wealth Management side is likely looking at these semiconductor swings with a mix of caution and opportunity, especially when you consider the weight these companies now carry in the S&P 500. Even the Interactive Brokers' fees and account structures are being utilized by high-frequency traders to exploit the intraday swings we saw this week. Micron's story is no longer about just being a memory company. It's about being a gatekeeper to the most valuable resource in the modern economy, data throughput. The tension between the stock's current price and its fundamental trajectory is where the opportunity lies. Most people are watching the daily candles, but the real story is in the Singapore factory expansion and the sold-out order books. This is a company that has moved from the outskirts of the tech world to the absolute center of the conversation. As we look toward the next quarter, the catalysts are clear. Watch for updates on the Singapore cleanroom expansion and any news regarding qualification for the next generation of NVIDIA's flagship parts. If they can maintain their lead in power efficiency, the downside may be much more limited than the bears suggest. The reality has consistently exceeded the market's narrative, and as long as that gap remains, the authority of the bull case stays intact. We have seen a shift from the old days of simple hardware to a sophisticated, high-margin, vertically integrated memory powerhouse. The volatility is just the price of admission for one of the most significant fundamental shifts in the semiconductor industry. It is a world where the standard rules of memory cycles are being rewritten in real time, leaving those who rely on outdated models searching for answers, while the leaders continue to push the boundaries of what is possible in silicon and storage. Micron has transformed itself from a consultant to a manufacturer, and now to a pillar of the AI age. The expectation was a modest recovery. The reality is a total restructuring of the company's value proposition. That is the kind of depth that separates a simple stock pick from a truly profound understanding of where the market is headed. Authority in this market comes from recognizing these shifts before they become common knowledge on every investing site. Micron has done the work to position itself at the finish line while others are still tying their shoes. Keep an eye on those support levels, but don't lose sight of the massive scale of the enterprise demand that is currently driving this engine forward. The days of Micron being just another name in the portfolio are over. It is now a central piece of the global tech puzzle. Disclaimer. This video is for educational purposes only, not financial advice. Please do your own research before investing. Market involves risk. Like this video, comment your thoughts, outshare with your friends, bell subscribe for more updates.